Zach, let me introduce ourselves. I'm Todd Stainbrook, and then Kerriann's with me as well. She's currently my assistant, but she's getting her mortgage license up, and she will be a full-fledged loan officer here shortly. So you look like you're our only student today, and so Jordana just asked us to jump in and maybe just explain the mortgage contingency block, because she said that's the area where agents need the most help. So I just printed off, and I apologize. I'm looking up the screen to see your face, but I know the camera's over here. Yeah, you know what? That might make it a little bit better. So basically, I find that this is where, oh, that's better. Thank you so much. Yeah, that works. So I find that this is where, agents, ask me the most questions. And when basically I get those calls, they ask, they want to know the rate range to use and what should I put in for loan amount. That's usually the two biggest ones. So if you look at, you have the third page of the agreement. If you have, it says the first mortgage on the property, it says the loan amount. So, so basically, depending on which type of loan that you choose, you can pretty easily figure out the loan amount from the pre-approval letter. So let's just use $100,000 because that's always the easiest to do numbers by. So when you put in for the loan amount, if we're doing a conventional loan and say the pre-approval says you're available up to 90% financing, then that would be $90,000 you put in that block. And then minimum term. Most people, most first-time home buyers, most people just entering the market are going to do a 30-year term. But that, you probably will have discussed with the loan officer in advance anyhow to find out what type of term they're taking. And then type of mortgage, like we just said, in that example, that would have been a conventional. So you put conventional there. It says for conventional loans, the loan to value ratio is not to exceed, again, we could put 90% there because we already know that we're going to do a $90,000 loan on a $100,000 purchase. The mortgage lender obviously will be us in that block. If we provided the pre-approval letter, then that'll be us. And then here's the interest rate. So I just picked randomly a lender today just to look at their rates. And it looks like the going rate's about 3.5%. So this is just for a conventional loan, 3.5% seems to be about the going rate. So I always say it's a good idea to do, a 0.5% range. So do a 0.5% on either side of that. And this is where it may take some updating with your loan officer that you're working with just to see where the rate ranges are that day. Or even, that month or that week, they do change. So you might have to spend some time talking with your loan officer. But let's just say it's 3.5 today. So I always say to do a range. So in that first block, it says interest rate, say 3.25. Buyer agrees to accept the interest rate as may be committed by the mortgage lender, not to exceed 3.75. So what I do is 0.25% on either side of that number. So I give them a rate range. I'll do 3.25 to 3.75. The rate that they're actually going to probably end up is probably somewhere in the middle. But that gives you a range, and basically what that does is say by the time the borrower goes to lock in, if for something happened and rates jumped up to 10%, then they don't have to buy the house if they don't want to, because it's outside of that range that they agreed to, because that's what they agreed to with their payment. And so that's the whole purpose of this block. Again, today, the conventional loans around 3.5%. Let's look down and see what an FHA loan was today. So looks like the FHA loan might be closer to 3.25. So in that example, we might put 3% and the high end 3.5. And so then those are things that you need to check with your lender, periodically. Say, hey, what's the rate range this week? What's the rate range today? Well, conventional is going to be anywhere from 3.25 to 3.75. And then on the FHA, it's going to be anywhere from 3% to 3.5%. That's the rate ranges that I know to put in those blocks. Now, the funky thing with FHA is generally they're 3.5% down. So that block changes a little bit. So if we go back to the first loan amount, it would be 96.5. So 96,500. And then minimum term, 30 years. And then we put type of mortgage, FHA. And so then you can put in this, again, it says for conventional loans, the loan to value is not to exceed. You can put in 96.5 because that's 3.5% down. Generally, most FHA loans require 3.5% down at a minimum. So same thing, mortgage lender, AJM Mortgage. Then we do the interest rate 3% to 3.5 rather than 3.25 to 3.75. So that in a nutshell is where I get the most questions. Like, what do I put in for loan amount and what do I put in for rate range? And those are how you solve those two options in that block. Do you guys have any questions for me?
No. Were you guys? Did you guys have something to refer off to with that?
I guess I don't understand the question. Go ahead.
You said you had a piece of paper you were looking at.
Oh, I'm sorry. Yeah, I just used. Can't hold up the camera, but I just used the third page of the contract.
Okay.
And then the area where the mortgage info goes on the sales contract.
It's under it's the third page of the contract. It's like what, paragraph 8, mortgage contingency. That's the block that we're filling in. Somebody doesn't like it.
Sorry about that, guys.
No worries. What kind of dog?
My dog was in the window also. I was like, get down.
What kind of dog, Zach? I didn't see him.
He's a Saint Bernard.
Oh man, small dog.
Big guy. No, big guy. Saint Bernard.
How old is he?
Hey, he's 3 years old.
3 years old?
Yeah, he just likes barking at anything that goes in our yard.
That's what dogs do.
Yeah.
So if you're looking at the contract, it's page 3 and it's paragraph 8 and it's the mortgage contingency. So that's the block that, we get the most questions on, where it says first mortgage on the property.
Looking for the right paperwork. I don't think I have it here.
Anybody else have any questions? Allie? We may have lost Zach. Well, if you guys have any other questions, Kerriann and I can hang out for a little bit. If you want to ask us any like one-on-one questions for any questions you may have on your own particular files, we're more than glad to. Alana stepped away and Zachary looks like he went mute for a minute. So yeah, if you guys have any questions, Kerriann and I'll be here for a while. Okie doke. Thank you.
Todd.
Yeah.
Hi, it's Allie. Sorry, I'm in my car and I couldn't figure out how to unmute myself. I have a question, not pertaining to what you were just talking about, but so I've heard through nonsense people in real estate groups on Facebook that a lot of agents are having a hard time getting FHA and VA loans approved. What is your, like, accepted, offers accepted? What is your experience with this?
I don't know. That's the second time I've had this asked to me today. Like, I haven't had any problems with it.
Okay.
When you say approved, the loan or the
Like
seller
accepted.
accepting?
Yeah. The seller accepting. Sorry, I
The
worded
seller
that
accepting.
terribly.
Yeah, I think that tide's turning. I really do. I don't like, so far as VA, like, and I kind of explained this to the agent this morning. Like, I got one, a pretty big one in Upper St. Clair done like in the height of the summer, and that was when the frenzy was going on. And I think personally, it's not like the soldiers coming back from Vietnam. Like, I think people all want to help out a veteran, and I got one done in the height of the buying frenzy in Upper St. Clair, and it was a $500,000 property. So yeah, I haven't seen it. I've seen, maybe VA is different because they want to help out the veteran. But so far as on our end, they're no different than a conventional loan as far as we're concerned.
Fantastic to hear. Okay, thank you. That was my question.
And another thing too is it all depends on the agent on the other side, right? Like, they may have this negative stigma that, like, hey, back in the day, you used to have an extra layer of inspections and all that. That's not true now, And I think I tell everybody, I'm like, if it's a health and safety issue, guess what? Conventional is going to flag it too. It doesn't.
Yeah, for sure.
It's not. The lenders aren't going to let like a broken window or pipes sticking through the wall. Like, if that's the case, or there's a missing outlet with wires hanging out, it's a health and safety issue. They're going to flag it too.
Yeah. Okay. Great. Thanks for the info.
Not a problem. Maliqua, it sounds like you're the only one else. I think Zach left. Do you have any questions?
Oh, no, I don't have any questions. I'm glad Allie asked that question about the FHA loans, because that was an area where, I was a little confused on why the sellers are basically looking down upon those, So that was the only thing I had. So thanks, Allie.
Yeah. I will tell you, like, and Kerriann can attest, is like, and I kind of explained this this morning too to the agent I was talking with. As a broker, we have a little bit of an advantage when it comes to FHA and VA loans. So what we've noticed is that, like, banks, like your brick and mortar banks, everybody sort of cuts their loans skinny on, like, conventional loans. But then they sort of, like, and I hate to say it, but they like bang over the head, like the FHA and the VA borrowers. Their rates are usually astronomical. And I think what they think is, like, those borrowers aren't going to shop around, and so we might as well make our money on them. And that's really, it's really, like, I don't know. I think it's bad. I mean, the wholesale industry that we're in, they don't treat a VA loan any differently than a conventional loan. And, like, so they price them just as competitively as, they would a conventional loan. So the one I had this morning was, he went to a bank today and they told him he could not get a lower rate than 4%. My going rate on a VA loan today is 3.25%. And he couldn't believe that I could offer that rate. Are you sure you can offer it? Can you? I'm like, I double checked again. It's still available. I can still get you 3.25% all day long. And that's just proof positive that, like, brick and mortar lenders are taking advantage of VA and FHA folks because they think they can. And so I would advise your borrowers to, hopefully look to us, or at least look to a broker, because we can offer them a much better product.
Cool. Thank you.
Yeah, and we don't have problems getting them through either. Like, we're still getting them through in 30 days. Yeah.
All right, good to know.
Todd.
Yeah.
So I have another question. It might be off topic. I'm not certain. At team meeting last month, you were mentioning something about some program or something or rather with almost 0% down, but I wasn't really paying attention. So can you tell me what you were saying?
Yeah.
What we're talking about?
Yeah. So I know like a lot of folks will try and do like the grant programs and so forth, but they do have income limits. And so we have like a handful of lenders that, and again, I just preface this where I have no track record with them, but you know, they're almost too much. It's almost too good to ignore, but they will offer 100% financing on an FHA loan because they'll give or grant the 3.5% down payment, you know, to the borrower. So what they do is they say, okay, let's say the mean average income in your area is $63,000. Well, if you're under that number or under 115% of that number, then it's a forgivable second. You don't have to pay it back. You can literally get in the house for no money down, just like you would on a VA loan. If you're over that 115%, you know, HUD median income, they'll still do the 100%, but then it's a forgivable. Then it's you have to repay the second back. So in that example, they would lend you on a $100,000 purchase. They would lend you 3.5% on a second mortgage, and they're allowed to because they're a nonprofit group. But yeah, we have those outlets if you really need them, and it might be a better alternative than going to say the grant programs because the grant programs have income limitations to them.
Okay, perfect. Thank you for clearing that up because I just honestly wasn't focused.
Right.
So thank you.
Oh, you're welcome. I know. It's okay. I mean, they tuned in for a little bit, you know.
Yeah, it's kind of crazy. Interest rates are going up a little bit. But I mean, it's needs to happen with all this crazy inflation that's happening.
Yeah, and they said that, like, everything I've read, they said, you know, Jerome Powell's gonna come out and make a statement. He's gonna raise them the first time, you know, pretty significantly. But like, when they say significant, they mean like a quarter point.
It doesn't, it's only like, it's not that much
It's
more.
not, it's not.
People always freak out. They're like, oh my God, I need to buy now because it's going up a point. But it doesn't make a huge difference to your mortgage.
And so then they think what'll happen is then the two subsequent hikes will only be an 8. So they're talking like maybe a half a point. So what? It's gonna go from 3.5% to 4%.
Yeah.
Like, it's not that much. I can show you on a calculator.
What do you think by the end of the summer? Do you think it's gonna get close to 5? No, it's gonna stay pretty.
I don't think so. No. So just if you do it per 100,000,
Yeah.
100,000 principal value, 3.5%, 360. Your payment would be $450 on 100,000 per 100,000 borrowed
Okay.
at 3.5. We put in 4, it only goes up like $27.
That's really good.
It's not.
Yeah.
It's not.
Okay. It's just
Yeah. It's not. It's not going to make or break these buyers. These buyers are going to buy anyhow. You know.
even with the crazy inflation that's happening.
Yeah, but I think that's people are getting used to paying more for everything, so they're not really like. It's almost like the real estate industry needed a leg up. Like, you know, we needed to.
Especially in this area.
Absolutely.
We needed to.
Yeah.
Yeah.
We never had to run up in 2008. We never had to run up, you know,
In
like
2012.
yeah,
we
right.
needed it.
none of it.
Yeah, other locations it was happening.
Hmm. Yeah.
Makes sense.
Yeah, I think we need it. Like, this is, you know, we laugh and we're not laugh. What we were like are stunned like how much properties cost in Lawrenceville, but you go to any other metropolitan areas, that's what they cost. Yeah.
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 Oh, absolutely. Like Northern Virginia.
Yeah.
It's insane. It's always been crazy there.
Right. Yeah, that's what it costs. You know, they talk about gentrification. It's not gentrification. It's just catching up.
Just catching up.
Yeah,
Yeah.
yeah.
We go to like Philadelphia. I mean, Philadelphia has so many metropolitan areas.
Mhm.
Same thing.
Yeah.
That
Yeah.
makes sense. I mean, if you're in the city, you're gonna pay more.
And I tell people this too, and it's true. Like, yes, you know, there's only 2 places in Pennsylvania where you have 2.5% transfer stamp per side. That's Philadelphia and Pittsburgh.
Okay.
But our annual property taxes right here
Yeah.
are pretty damn reasonable, you know?
Yeah, what is it here? in
Like,
Pittsburgh?
I mean, like, you know, here's the thing, like, if you're buying in an urban environment, there's a lot of taxpayers per square mile.
Okay.
So you actually, your share is a lot less, you know, than say you buy out in the suburbs
Yeah.
where there's less taxpayers per square mile, you know? And I don't know, I find that the property taxes here in town are pretty reasonable,
Okay.
you know?
That's
I mean, our house in Bethel, you know, it's probably appraised for anywhere from 250 to 300, and we pay about $3,600 a year, $300 a month, right?
okay.
There's people buying places on South Graham Street for $500,000-600,000, and their taxes are about $300 a year or a month, you know? So it's like,
Why are they complaining? Yeah.
exactly, it's not that bad.
It's not.
No, you
It's-
pay more
Yeah.
for the property, but your taxes really aren't that bad. you
What's
know?
crazy is that like I live on the edge of Allegheny. I'm in Butler County. Butler County is significant different compared to Allegheny County for
Sure.
taxes.
Yeah, same thing with Westmoreland. Yeah, I agree. But yeah, it's just, I mean, and we also noticed, like, this is just me, like, because my partner does a lot of work up in Butler,
Yeah.
and he always puts more in for homeowners insurance. Well, here, you're so close to a fire hydrant, your homeowners insurance is actually pretty reasonable. You
Yeah.
know, I use $50 a month up to like $250,000 in sales price.
Yeah.
You know, and that's about right. You know,
I bought a townhome, new construction, Orion home back in 2005.
Mhm.
We paid 300,000 for that. And that was right before the bubble. And then a year and a half later, we sold it. We made $100,000 equity. But back then,
Mhm.
2005,
Mhm.
we paid 300,000.
Wow.
Because Virginia has always been like, that was Fairfax.
Yeah.
Virginia's always been like, now it's
Yep.
it's normal to see like a townhome at 600,000.
Right.
It's just,
Right. I think people got to get in love with the idea that like you're just not going to buy anything livable for like under 100 grand anymore. It's not going to
I
happen.
mean, the fact that you still can. I mean,
Yeah.
there are some areas here
Yeah.
that you still can do that.
Right. Yeah.
It doesn't happen.
Yeah. It doesn't. It's hard. You have to set the expectation.
Mhm.
You really do. You don't have to be mean about it, but like you have to set the
Well,
expectation.
and I think when you start to set the expectations, then you're gonna have different type of people moving out, moving in.
Mhm.
Gonna have a different presence too.
Mhm. Yep.
You know, the type of customer.
The clientele. Yeah.
Sure.
I agree.
Anybody want to?
I don't know. I guess Kerriann's muted, and then A Laws.
Kerriann reminds me, she looks like Adele. I just told Alana.
Thank you.
Yeah, I was like, oh my gosh, she looks like Adele.
You'll have to have your Sunday night special, Kerriann. Yeah.
Right. Like Adele before she started working out. No, I'm just kidding.
Good morning, everyone.
Hey, how you doing?
Good. How are you guys?
Is that Amanda?
It's Amanda. I look crazy. So
How are you feeling?
I feel a lot better. My nose still is stuffy.
Uh-huh.
It's worse in the morning. Would you stop? Of course, the whole house is shut down. We're all
Yeah.
in here.
Right.
Okay. They say hi. So
Amanda, we went through the mortgage contingency block, on page 3 of the sales agreement. So I don't know if you had any questions or you want me to go back through it, whatever is convenient for you. Are you there?
sorry, I was on mute.
No worries.
I was saying we can just keep moving forward. And I don't want to have it recorded, so I will just go ahead when she released the video, I'll just catch back up
Okay.
to where
Yeah. We're pretty much done. It wasn't really a long session. It was only about 15 minutes. So I'm just more than willing to answer all questions you might have. But yeah, I mean, if you can listen to the recording, that'd be great. Or I can go back through it real quick if you want.
Okay, well then if it was only 10, 15 minutes. Yeah, let's no. Yeah, let's go over it again.
Okay. I'll just be really brief and I'll just go over exactly what I went over with Zachary earlier. So you probably can't see it, but I'm holding up page 3 of the real estate sales agreement.
Yeah, I'm about to pull one up now.
Okay.
My end.
Yeah, pull that up, and then it's under paragraph 8. It's mortgage contingency.
Okay. I said page 3, paragraph 8. Yep.
Okay, so this is where I get the most questions from newer agents. Is they want to know like, what should I put in for loan amount, and then what should I put in for the interest rates? So this was what I was telling the folks earlier, is that basically, you want to be in touch with your loan officer, pretty regularly, just to see where the market's at and see what, is the expected range. Because if you put in a range that's dated, let's say you had a range from last year and you said, oh yeah, you should be able to get a 2.5 to 3% interest rate. Then all of a sudden they're not looking at any interest rates any cheaper than 3.5, then it may question and be like, oh, what, they just, they might get panicked. So you got to set the expectation, where the rates are currently. And so I always like to use the example of $100,000. So let's say you get a pre-approval letter over, conventional loan with 10% down, 90% loan to value pre-approval letter, on a $100,000 purchase. So in that first block where it says loan amount, you'll put $90,000. Now you want to be in touch with your loan officer and the borrower and just see like what type of loan are they taking. But for this exercise, we're going to assume it's a 30-year term. So we'll put in minimum term 30 years. Type of loan, pre-approval said conventional. So you put conventional in there. Then it says for conventional loans, the loan to value ratio is not to exceed. Now you can put this for FHA loans too. Then you put 90% there because remember, they're putting 10% down, $90,000 loan amount, $100,000 sales price. The percentage is 90%. Mortgage lender obviously would be us in this case. And then the interest rate. So they're looking for a range here. The purpose of this block is so that if the rates would change monumentally overnight and the borrower can't get that rate, then they're able to opt out because their payment swings too much. So you want to kind of bracket whatever rate is the going rate that day for that borrower. So let's just say, hypothetically, I look today on a conventional loan, rates are hovering around 3.5%. So in that first one, you would say 3.25. And then the second little block, I would do 3.75. I always say do a 0.5 point range. So you want to put a 1/4 point on either side of the rate that they're actually going to end up with. Because they may choose to buy it down. They may choose to take a higher rate, get a little more credit towards their closing costs. You don't know the situation. You want to give them a little wiggle room. So in that case, I would put interest rate 3.25 and not to exceed 3.5, or I'm sorry, 3.25, 3.75. So same thing applies for FHA. So generally in an FHA loan, people put 3.5% down. So in this example, the loan amount would be $96,500. The term, again, 30 years. And then in type of mortgage, you put FHA instead of conventional. Again, for conventional loans, you can still put in the loan to value ratio here, 96.5%, because they're putting down 3.5. That equals 96.5%. The mortgage lender, again, Todd Stainbrook, AJM Mortgage, whatever. And then now the interest rates on the FHA are a little bit better today. They're about 3.25. So we might use 3% for our start rate, and then 3.5 for not to exceed rate. And so there again, gives you that 0.5 point leeway, between the, you're what we call bracketing the actual rate. So the actual rate's 3.25, then you put a rate higher and lower than that rate to give a 0.5% range, if that makes sense.
Okay. I think, yeah, I think I get following along.
And, the first couple of times, like if you need to call me, I'd be more than glad to help you walk you through it, on your particular transaction, I'd be more than glad to help you.
Thank you.
Okay.
Yeah. And then, I guess, in the next question, after you get to like past that box, letter B. Okay. Upon receiving documentation demonstrating letter's approval, the buyer will promptly deliver a copy of the documentation to the seller, but in any case, no later than what? I think I always call lender, whoever the lender was, and I just put whatever number, or maybe I'll put like 20 days or something. I don't know. But what is kind of like a general rule of thumb when it comes on to like what's it like a general way to answer that question?
10 days before the closing. Usually the standard, the industry standard is that usually that date should be 10 days before the closing. 10 days prior to the closing, you should be able to produce a commitment letter to show that, all or most of the conditions have been cleared on the loan. So that is usually the acceptable amount of time.
Oh, okay. Oh, awesome. Okay, good. Because I was just putting in anything.
Yeah. I mean, you may get like a seller agent question that, They might say, we want it, 15 days and 20 days in advance. I've seen it as quick as 10 days after the acceptance of the agreement. Well, that's not going to happen. Like, that's ridiculous. You're not going to get an appraisal back in that time, so it's got to be reasonable, but the general accepted length of time is 10 days.
Okay, thanks. Thank you. Sorry.
No, it's okay. Those are valid questions. I should have
super muffled in here.
No, I should have actually when Zach and the others were on. I should have mentioned that.
And I think everything else is practically already pre-filled in as
Yeah, it's pretty standard. Like, again, I even get veteran agents like always calling me up in the middle of the night being like, hey, what do I put in for that block? So it seems like loan amount and rate range is always the two biggest ones. You can generally figure out the loan amount, right? I mean, like if it's $100,000 purchase and they're putting 10% down, that's pretty easy math. You can figure out like, that's $90,000, but you may not have talked to Todd in a while, and you might like, I don't know where the conventional rates are right now. So I got to call Todd and see what the rate range is today. And I'd be more than glad to help you with that.
Thanks, Todd.
Not a problem.
Oh. Sanaya thinks she's funny. I don't know if you hear her. She's mocking you over here.
I know. I hear. Hey, Sanaya.
You say hi, Mr. Todd?
Hi, Mr. Todd. Say hi.
Okay.
Hey, Sanaya. How are you?
Good. Say hi.
Realtor in training over there.
Say hi to
Sanaya, shush. All right, sorry. I'm sorry. What did you say?
No, I was just saying hi to Sanaya. I was just waving at the camera.
No. What's can't even quarantine in peace. So I'm in here with a mask on because, of course, they're like constantly in my face.
Yeah. When did you start feeling bad?
Thursday night.
Yeah.
Last Thursday night.
I know Kerriann had it a couple weeks ago. She's
Yeah, I hope you feel better soon.
Thanks. Yeah, it was weird because I got a root canal Wednesday, and I was gonna call this after the root canal because the last one I got, I went to work afterwards. So I was like, I'm gonna come in, and I literally pulled up in the parking lot, and I was eating something, and I forgot I had scheduled something to meet a contractor at 1. So I literally didn't even make it into the office, which worked out because my mouth I was crazier than what I thought. But that night, I felt like a small scratch, and I was like, that's random. And then I went to sleep because it literally didn't start till literally as soon as I got into bed, and I was like, okay. And then that was that Thursday night. The next day, that night is when I really had a scratch in my throat and my nose was stuffed up, and I was like, okay. And then the next morning it was just a wrap.
Yeah.
But they were pretty mild though. It was just like a sore throat, and then
I feel like it's so hard to tell if you have it or not because I feel like everybody has such different symptoms.
Yeah.
So you're like, is this a cold? Is this more? Me and my husband, my daughter all had it, and it was all like completely different like things.
So my daughter, she tested negative. He's just like, you gave it to me, so I think that's confirmation. Me is confirmation enough for him, I guess.
Right. My 8-year-old had it, and she was out skateboarding the same day, and I was dying in the bed. So I was hoping to get her version, but I hope you all feel better really soon.
Thank you. Yeah, this one, the baby hair, he just have a stuffy nose. He has stuffy nose, but everyone seems like they're smiling all over again. Throat's not swollen and sore anymore.
Hey guys, I hate to cut this short, but Kerriann, we just got an update on Jackson. I think you and I had to hop on this. We have Amanda. We have one closing at 2 p.m. today, and we got.
I got one at 12. That's what took me so long to hop on.
Yeah.
So trying to get pushed out to go through. Waiting.
Yeah.
All right.
All right. Thank you so. Yeah. Thank you so much.
All right. See you guys. Bye.
Will do. Bye bye.